Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Rusty Wiley. He's the President and CEO of Datasite. We're going to take a look at how today's economy is impacting global M&A deals and how the ecosystem is responding to COVID-19. Rusty, great to have you with us. Certainly unprecedented times in the markets, and I would imagine that there is an impact to how the M&A ecosystem looks. So tell us more about that, and then also introduce us to Datasite.
Hi, Jill. Thanks for having me on the show today. Yes, we've seen a significant impact of the COVID pandemic on the M&A markets. We have the benefit at Datasite of seeing a large volume of deals. About 20% of the world are coming through our platform and supporting of deal professionals annually. And we're also at the inception of deals. So most of what is published is what you're seeing is 6 months to 9 months in arrears of the deals actually being launched. And so, yeah, we saw relatively healthy M&A markets in January and February with, between 8 and 13% growth. And then in March, we saw a definite turn to flat to slightly negative. And April has also continued that trend, being down nearly 20% on a year-over-year basis. So it is certainly having an impact on the volumes. I'd also add the other thing we're seeing happening is deals are stalling that are on the platform. So what we watch is if a deal has been launched, but you're not getting the activity on the platform, it suggests that it's not active. And we've seen that increase about 63% on a year-over-year basis. I think the positive lining in that is that we also see the deals are staying in a ready state, meaning they expect to be able to execute the transaction on the other side of the pandemic, and when the economy has become to return to normal and the credit markets return to normal. So we're seeing projects not closing, and they're staying at a normal close rate of about 7%. So those are clear indications of the impact of what's happening from the COVID pandemic.
All right, and tell us about Datasite, because you are pulling in all this information from a number of sources.
Yeah, so we've had Datasite as an active platform for about 15 years, and we've done north of 100,000 deals in that period. And we have about 1 million active users over the last 5 years. And really, it's a platform that's used for the entire deal lifecycle. So preparing for launching a deal, actually doing an outreach on a deal, doing diligence on a deal, and closing a deal. And we support a wide array of use cases. So we support fundraising, we support asset sell size, we support what you're really seeing occur in the market today, more restructuring transactions around debt and around fundraising and around bankruptcy as well. In fact, we've seen over the course of the last 30 days about an 8% increase, 7% increase in the number of deals on the platform that are structured. So it's a high velocity platform, and we get visibility into a large number and variety of transactions every year.
All right. Now, what are you hearing from the M&A ecosystem?
So it's interesting. We went through a really early phase of getting into the work from home mode, and you've got from the survey we did recently with our ecosystem, just about everyone is working from home at this point, about 97%. And we also kind of tested the temperature on how they feel about how severe this crisis is versus previous crises. And if you look at the feedback we got, the rating was about 8 on a scale of 10. So people are clearly distressed about what's going on in the M&A professional ecosystem. And then the other is looking at the duration of the crisis. The expectation is this is likely going to last 7 months or more. And you're seeing in the M&A world, as well as what you're seeing in the corporate world, focusing on containing cost and freezing hiring and doing selective furloughs as required to preserve cash. So all these things are occurring in the ecosystem. And then I think the last bit, which is interesting, and it's very similar to the 08-09 crisis, is we're watching this rotation of deals. And we did a webinar with DebtWire a couple of weeks ago and surveyed about 500 professionals in the M&A space, and fully 70% of them say that the volume of restructuring deals is going to accelerate rapidly in EMEA in the second half of the year. So some really common themes. And when you step back and look at it, and we watched it again in 08-09, what has to happen is, obviously, we've got to get back to some normal economic activity, but we need to see multiples stabilize in terms of value of companies, and we need to see the credit markets stabilize as well. And you've got to see a reduction in the spread between treasuries and high yield to really get the M&A markets back energized.
Yeah, I would imagine too, with so much fiscal stimulus, $6 trillion worth being pumped into the system, that's going to make it challenging trying to figure out what these valuations are going to be on public and privately traded assets.
You know, it's a great point, and we're looking at it because it actually creates an artificial environment. If you look at typical down economic cycles, even hard down economic cycles, we kind of follow a pattern where you go into, restructuring of debt or direct fundraising or pipes, or even into bankruptcy. And what we're seeing is the infusion of cash is actually slowing that processing, making it less predictable, and therefore, to your point, not allowing valuations to settle to where buyers can get confident that they're paying the right multiple.
All right, Rusty, great insight. Thank you so much for joining us on Trade Talks.
Hey, Jill, thanks so much for having me. Have a great day.
Thank you. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.